Welcome to episode 5 of Compass Capital Conversations. It's a post-election outlook. I've been getting so many calls wondering when I was going to do this, and I think I found the best person that I know that would be able to help. Her name is Kara Murphy. She is the Chief Investment Officer for Kestra. She's also a chartered financial analyst, and she does these sort of presentations. I saw one from her when I was in Austin, Texas. Thought it was fantastic. You may have also seen her on CNBC. So what I'd like to do right now is pass this off to Kara to give a little bit of a breakdown on who she is and what she does for Kestra.
Well, thanks, Jared. It's always a pleasure to join you on these. And, I love talking markets all the time. I oversee a team of 14 investment professionals who wake up every morning and think about markets and portfolios. And so, we love to work with folks like Jared and think about how we serve their clients better. And ultimately, we run portfolios, we do research on the markets, we publish on the markets, helping Jared help clients make good financial decisions and reach their financial goals.
And she actually inspired me to start doing this for my clients. So I want to thank you for that. Here's where I want to start. And this has been the biggest one. Post-election, obviously, we have a new administration. Well, it's a repeated administration to a degree,
Right.
but there are new policies and there are new things to be thinking about. And one of the biggest concerns that I am getting from clients is tariffs. Okay, so this is the one that I'm getting the most amount of notes on, which is essentially, we don't know necessarily how they're going to be implemented yet. They could be more globally. Pick a country and you say, we're going to impose tariffs on all their goods and services. They could be more surgical. I'm not quite sure exactly how that's all going to play out, but the biggest fear is inflation and what that means to the end consumer and what that means to the economy. Kara, I wasn't sure if you could touch on that a little bit, as I think it'd be a valuable starting point.
Yeah, I think it's a great place to start because like you, that's one area where I've been getting a lot of questions and where we've spent a lot of time. And there are good reasons why we're really focused on tariffs. So let me just give like a little bit of background. Number one, it's because it came up a lot during the elections, and it's a tool that is very much within the power of the executive or the president to be able to make decisions without needing approval from Congress. Now, another reason why we're focusing on tariffs is that it's a tool that's been around for a long time, but really hasn't been used in like 100 years. And so it was used pretty aggressively at the beginning of the 1900s and then kind of put away. And it was only when Trump in his first administration started rolling out tariffs did it become like an accepted policy tool again. So Trump enacted some tariffs largely directed at China in his first administration. But then interestingly, Biden continued those policies and in some cases deepened them. So the expectation is that in Trump's second term, that tariffs, they're now out of the bag, right? They're an accepted policy tool on both sides of the aisle. So, and you alluded to this, how different is his approach to tariffs going to be in term 2 versus term 1? And we don't know. There are a lot of uncertainties. So what we do know is that when tariffs were put in place in the 2016 administration, the economy weathered it fairly well, right? There was a fair amount of hand-wringing about it at that time. But what ended up happening essentially is that a lot of goods went from being purchased in China to being purchased from places like Europe. So our trade balance with China went down, but our trade balance with Europe went up. So in that sense, China was being punished as a trade partner, but it didn't necessarily generate investment in the U.S. Now, the way that tariffs are being talked about for this new administration is a little bit more blanket, right? And you mentioned this. If he takes an approach where it just tariffs on everything that's imported, that can be more inflationary because all of a sudden costs go up. It takes a long time for manufacturers to kind of then transition to building stuff in the U.S. But then you can also imagine if we raise tariffs all over, our trading partners are going to raise tariffs, right? And that just starts to kind of create this sort of arms race for tariffs. And in that case, if they're really punitive tariffs, it can actually slow growth rather than raising inflation. And so think about that for a moment. If, let's say, car prices go up 5 to 10%, you might be like, okay, I'm going to buy the Ford instead of the Honda. But if car prices go up 20%, you might be like, I'm okay with my old clunker. I'm not going to buy a car yet, right? And so that's really the difference between higher inflation versus slower growth.
And so let's say we get into that environment where we're imposing tariffs on China or we're imposing tariffs on any of these other countries that are manufacturing cars. And all of a sudden now domestic production is flourishing because of that. Is that something that can offset it? And at what level does that offset balance not work?
Yeah, I mean, that's like the $1,000 question, because if this is working as it should to stimulate domestic production should offset whatever we lose outside the US. The challenge is that, let's take cars. Well, we'll continue with the car theme. It takes a really long time for manufacturers to build out manufacturing plants here in the US. That could be a multi-year process. So it might be a while before we actually start to see production come online there. Now, we're already seeing a fair amount of manufacturing firms bringing manufacturing closer to home, whether it's like Canada, Mexico, or actually within the state in the United States. But what we've seen is that that's been a very slow move. So you would expect that there would be at least a few years of sort of like sand in the gears of getting to where we want to be.
And that also dovetails into just trade protectionism overall.
Mm-hmm.
And the idea of, if we go down this route, we don't do business necessarily with China because we like to do business with China, or Vietnam
Right.
because we like to do business with Vietnam. We do business with these countries because it's cheaper to do that. And in the event that occurs, is that the biggest worry? And I'm not talking about just on the auto side. I'm talking about our cell phones. I'm talking about our regular goods. Is that the biggest worry? If we go down that road, we're going to bring that manufacturing back, but are we going to be able to afford the goods and services that we're used to?
Yeah, and you make a great point, right? Like, being able to expand our trade outside the US has been this disinflationary force, right? We've been able to continue to drive down prices of goods. I know Amazon shows up on my doorstep an awful lot with stuff that's made in China and elsewhere. So yes, there is a risk that prices in general start to go up, for sure. And I think that has to be policymakers' trade-off. Are we willing to take higher prices in exchange for having more manufacturing in the US? And I think that's still to be determined. And the one thing that makes me like a little less worried about tariffs, the president can put those in place fairly easily, but he can also take them away. So let's say there's a blanket 50% tariff on all goods imported into the US. And that gets put in place, and 6 months later, inflation is raging, people are pissed off. That can quickly be rolled back, right? And essentially overnight. So if there is a policy mistake, there is the opportunity to iterate. That's not where things are going to stay.
I like that, because I think a lot of times we look at everything to have to go through congressional approval. And Congress can't agree on the bagels in the break room. So how are they going to agree
Right.
on any of this stuff? So it is good to know that this is something that can be implemented and taken away. I think the next one I'm getting is corporate tax cuts. We already have one of the lower corporate tax rates that we have in modern history. We're at 21%. We're looking now at going to 15%. Questions just about, wealth inequality, budget deficits. Is there anything there that we should be thinking about as far as the market or the economy is concerned?
So I think one of the largest sort of intractable problems that the U.S. is facing today, well, you actually mentioned two of them. It's growing U.S. government debt and then income inequality. And as you look at, so let's take U.S. government debt relative to the size of the economy. That level is at the highest it's been like pretty much ever, and by a large margin, right? It was already high pre-COVID and then took a huge step up during COVID. It's come down a little bit since then, but it's extraordinarily high. And I've been in this business 25 years. And for much of that time, I didn't really worry about government debt increasing, because if you looked at the cost of servicing that debt, was actually the lowest that it's been since like the 1960s. So even though we owed a lot of money, the bills that we had to pay every month were really, really low. So what that told us is that the bond markets were okay with the US government borrowing a lot of money. And there are a lot of reasons for that. Now with interest rates higher, that cost has increased significantly. And if interest rates don't come back down, it'll just continue to go up, and it will become quite punitive, right? And we'll start to take up a bigger and bigger part of the budget. When you look at other parts of the US government budget, you're just like, I think a lot of times there's this idea, well, just cut your spending elsewhere. But if you look at where the government spends money, the vast majority of it is in things like Social Security, which both sides of the aisle have said we're not going to touch. Well, if you can't touch some of the largest spending items, you're left with these really small line items that are really hard to cut to get you to where you want to be. So I think this, and let me emphasize too, we also did work on this looking at how much the deficit increased under different administrations. And guess what? Every single president since Truman has increased the deficit. Right? This is not a party problem. This is an American problem, which also makes it a lot harder to undo, right? I wish we could just, elect one party into office and they're going to take care of it all. It's just not going to happen, right? This is going to be a multi-generational effort to start to unwind some of these budget deficits and to make sure that we don't create a bigger problem.
Well, yeah, we're going to have a party that's going to come in and say, hey, guess what? We're going to raise taxes and cut spending. Elect me.
Right.
Yeah.
And who wants to vote for that kind of candidate?
Yeah, that's a really tough proposition. So I'm of the place right now where, unfortunately, I'm just hoping a solution comes when it's dire, because I don't see us ever playing a long game. And that could just be, maybe I'm just being a little too pessimistic, but it's just not, it hasn't been the trajectory of what we've seen in politics. So again, this is something we've been talking about for years. I guess it's to be determined. I'll go on to the next one that I'm getting a lot of. I think I might even tie these two together. I'm going to tie in tech and I'm going to tie in crypto, and I'm going to explain why. This administration is looking to be more favorable in these spaces as far as a regulation perspective. On the tech side, I can see why. We need to stay competitive, especially in places like artificial intelligence and quantum computing. But at the same time, we are going 1,000 miles an hour down a road that we don't know how it turns out. And I tie that into crypto too, to a degree, because we're talking about becoming more and more friendly, and that's why we're seeing Bitcoin at 100,000. I get all of that. What are the pros and cons of this approach? What are the pros and cons of saying, hey, we're going to be world leaders in this space. We're going to get there first. We're going to be able to potentially create more innovation, and we're going to be able to increase profitability. But what are the cons for not taking a step back and saying, hey, let somebody else do it first and let's see how it goes?
I think this is a really important question. Let's take like crypto for an example. Part of what is really attractive about crypto is that it is not regulated, right? It is a way of getting to a store of value that's not controlled by any government. Instead, it's controlled by market forces. Okay, that sounds pretty cool. But we've had a lot of instances where, let's say their crypto custodian went bankrupt and they lost their money. Well, who do you call? Well, they're not regulated, or at least very lightly regulated, or their crypto stolen. Who do you call to chase that down? And then I think so people have these like negative experiences, and then all of a sudden they want the infrastructure, right? They want the government and the regulation that's behind it, but they find out too late that they don't have it. Obviously, you can't just shut it down. The genie's out of the bottle. People are using crypto. It's being shown as being valuable. It can be used for like really cool things. It can also be used for not so cool things. So I think we haven't figured out kind of where that balance is. And let's not forget that new things are scary. Change is scary. And so there are some people who are going to have this natural reaction and want to just shut it down and say, no, we can't do that. But we know that that doesn't work. We also know that having no regulation, right, and letting anybody kind of plow into stuff is also not good. So you're right in that this new administration has been very clear in that they're going to start to roll back some of the sort of weights or the headwinds that have currently been on crypto. But I think we're going to find that there needs to be some sort of oversight and regulation to make sure that it's in, the end user's best interest.
And so then I want to get back now into other tech. And this is one of the biggest things that I always have conversations with clients about. I'm learning more about quantum computing, and that's actually scaring me a little bit more than even artificial intelligence. And we can get into that into a certain degree. But really what I'm seeing is we're going into a revolution. We're going into a tech revolution unlike anything we potentially have ever seen before. And I don't know what that means for humanity. I don't know what that means long term, but I want to talk about what it means for markets. Because one of the things when I was dealing with these conversations about the election, and I could show people all the charts in the world to say, hey, you know what? It probably doesn't really matter who's in the White House. If we go throughout history, it's fractional percentages on Democrat administrations versus Republican administrations. But the one piece I've been hitting on is we're going into a technology revolution that is going to make companies more efficient, which thus is going to make them more profitable. And I want to know how much you think about that. And is that some reason to be cautiously optimistic, at least in the short and intermediate term? Or is that not enough of a tailwind to keep the market going?
I think you're thinking about this in the right way. And, I happen to start my career almost exactly at the day that the NASDAQ peaked in 2000. My first couple of years.
The worst. I officially became advisor in 2007.
Oh my gosh. Yeah.
Exactly.
You just went right into that. But I mean, in retrospect, and I imagine you feel this way too, like it's a great place to learn. It's really hard when you're going through it.
You can't fall out of a basement window.
Right. I love that. It's great. So during that time period, so I joined in the late 90s. There was, everybody just wanted to work at a .com. And if you looked at the market, you had all these companies that literally like put .com in their address because they would immediately see their stocks go up.
Yeah.
So there was this rush, this idea that, okay, the internet's going to revolutionize everything. So we need to own these companies that have .coms in their address. What we found is that I think anybody who's on this is going to understand that the internet has revolutionized our daily lives. It's revolutionized the way that we work, the way that we communicate, the way that we understand the world, the way that we buy things, right? So think about how much has changed in that time period. My kids are still marvel at the fact that I was born before the smartphone. Yeah, I mean,
You're born in the
but
1900s. Do you know what that's going to sound like really soon?
I know,
Yeah.
I know. It's like horse
Mhm.
and buggy, right?
Yes.
So, but what's interesting is that when you look at the companies that the market thought were going to benefit the most from the internet, many of them are not even around anymore. And I mean, that's a wonderful thing about our economy, that we have this what's called creative destruction all the time, where people are constantly competing and sort of finding newer ways of doing things. But so if we take that learning from the .com era and put it into AI, I'm with you in that I think AI and quantum computing, it will revolutionize how our kids work. My kids will have AI incorporated probably into everything that they do. And what that means is, my son used to talk about wanting to be an accountant. And very quickly he was like, oh, that's going away. That's going the way of the dodo bird. So he's thinking about what else he can do, right? So that's all creative destruction that's happening. And what that means is that it's going to be very hard to determine the actual companies that benefit from this overall. But to what you said, corporate profits should improve. Right?
Yes.
Those companies that are able to figure it out, those individuals that are able to figure out how to harness AI to make them more productive, those are going to be real winners going forward. And I think you'll see this kind of general uplift for a lot of these companies, but it may be different companies than where we are today.
I don't know who the ultimate winners are going to be, especially in the AI space specifically, but I know my use of AI now has made me more efficient. I
Yeah,
really
it's
honestly believe
fabulous.
that. I am more efficient. I am able to solve complex financial planning questions. Now, the professional is still valuable for sure because, you got to even know what question to ask. And if you
Right.
don't ask it the right way, and you got to be able to interpret data, and you got to be able to see when it's wrong and understand that. So it isn't perfect, and it may never, at least in the short term, be perfect. But wow, is it making me more efficient? So I'm assuming that eventually everybody is going to be more efficient. But then again, who's going to adopt it? Who's going to be scared of it? How long is it going to take? Regardless of what it's
Yeah.
capable of, at what point are my parents going to be using ChatGPT daily? I don't know that answer. So it's interesting, but it's the point I always try to make to clients is that I think there's going to be efficiencies across the board, which is if we just look at the S&P 500, I think those companies are going to be more profitable. And so if we're worried about who's in the office and all of that, I don't necessarily think that matters. This genie's out of the bottle. At least that's my perception.
Yeah, I totally agree.
Okay. So the next one I want to quickly hit on is the Department of Government Efficiency. And the reason I want to hit on this is because this is something that I have been saying behind closed doors for a long time. We should have some sort of Department of Government Efficiency. You hear about waste, fraud, and abuse. You understand that, hey, you know what? If I don't spend it, I lose it in my budget next year. And it creates these incentives to be not necessarily efficient. On the flip side, if we go in and start cutting a bunch of services and cutting a bunch of departments, it could have an economic effect, which could then have an effect on the markets. Do you have any sort of thoughts or opinions on that?
For this one, I don't feel like we know nearly enough about how this is actually going to happen. So, contrast this with tariffs, right? That can happen at the stroke of a pen. Things might break, right? We might see prices go higher than consumers are willing to take. Okay, so then you roll back tariffs, right? It doesn't mean that nothing will break, but it's relatively easy to fix. As you point out, if somebody comes in and says, okay, this department, they're inefficient, we don't really need them, let's get rid of them. If they find out they're wrong, rebuilding that department is extraordinarily difficult and can take years and years and end up costing more money over time. So I think there are higher stakes when we're talking about government institutions. And I also think a lot of times there's a lack of understanding about all the stuff that happens behind the scenes. That doesn't mean that there's not plenty of inefficiency. I'm sure there is. There's inefficiencies everywhere. And in a government institution, tends to be a little bit more because you have these sort of like very complex structures. And then you think about like the two heads of the Department of Government Efficiency, neither of them has a government background. So even for them to be able to go in and sort of identify where those efficiencies are, it's going to be really difficult if you have no background in that. Those
Yeah.
guys are good at cutting, but are they good at
Very
understanding
good
what
at
to cut in
cutting.
government?
Well, that's the biggest, I wouldn't say necessarily concern, but we've seen a blueprint. We saw Elon go in and cut 80% of Twitter, just like
Right.
on day one. Now, is that a good thing or bad thing? That's up for debate, but he uses a meat cleaver with this type of stuff. So it's interesting. And then how much of that will actually require some sort of congressional approval? I don't know. Like,
Yeah.
you
And I
just get
think
rid of
what
a
we'll
department.
find is that a lot of it ends up needing congressional approval, which will slow things for sure.
I'm going to hit on this one real quick. The last time that we had a Trump administration, and again, it's the Biden administration too, but there was a lot of stimulus and there was a lot of, hey, I'm going to write a check and send it to your house. I don't necessarily know if that's going to happen this time. I don't even know if he's even spoke about it, but from an inflationary perspective, is that a concern? Because the way that I'm seeing inflation, we dumped a ton of money in the system right from a helicopter, right? And we also had obviously supply chain issues and there was a number of things in COVID. But is that anything that you're thinking about? Is this administration going to come in and start handing out free money again? And is that going to necessarily start spiking inflation?
So I think that's always a temptation. People like getting checks in the mail. Who
Right. Totally.
doesn't? And if, things are not going really well over here, there can be a temptation to anybody in power to just like throw a couple checks out there and get people to feel better. Again, there are a lot of restraints on that. We talked about the limitations of congressional approval. You've already seen Trump be aggressive and trying to sort of lean on the Federal Reserve to cut interest rates more. The Federal Reserve has pushed back and said, no, we're not going to do that. We're going to keep doing our thing. So there are checks and balances in the government to try and limit that behavior, but it is very tempting. I just think it'll be actually difficult to implement. And if you think about, you mentioned like the helicopters dropping dollars, that was a really extraordinary time period during COVID where you had the economy that essentially went into a black hole. We had a Great Depression like decline in the economy over the course of a few weeks. That's a really unique circumstance. I would hope, knock on wood, that none of
Yeah.
us have to go through again. So it would be hard to generate the type of support for that stimulus.
I guess this would be the last. I'm going to hit you with one final question after this,
Okay.
but this is kind of the last topic: immigration policy. Now, I think most people would say we need to have secure borders. I mean, I don't really think that that's up for debate. So, is there things we can do to secure the borders better? Absolutely. But there's also a number of workers that have become vital to the economy, some legal, some illegal. But at the end of the day, we have a 4% and change unemployment rate right now. And there's a lot of service jobs that these immigrants that are coming over are taking, and we need them to do that. Is there any concern about when we're hearing we're going to be sending people back home, we're going to be doing all of this in really a more of a sweeping manner than we have in the past? Is that an economic concern?
Yeah, and it's interesting because this is a topic that tends to get tempers flared on both sides of the aisle. But that's also where I think our work is so important in looking at the actual data and like let's take out the political noise and understand how these types of policies really impact the economy and what should we be thinking about. So, and I think you laid out the scenario really well in that we have extraordinarily low employment. Companies are still having a hard time getting enough workers for jobs. And if you look at like the percentage of the U.S. labor force that's foreign born, so, legally in the U.S., it's at a high. So we've relied more and more on non-U.S. born workers in order to staff those roles. And there are certainly some industries that rely more on foreign born workers than others. And I live here in Texas where, obviously we're much more impacted by folks coming over the border than other areas of the country. But just pure math. If you remove a lot of people who are working today, you contract the level of the labor force and you make it that much harder for companies to staff up. Like that's just how it works, right? And so I think, concerns about potential wage inflation because of that is very real. And then also, we want to be a destination for the best and brightest in the world. And if we start having this like very sort of punitive approach to foreign-born workers, that could very easily dissuade people from coming here, and then it might hurt the quality of our workforce as well.
Okay, so here's the $1 million question. there's obviously pros and cons to all of this stuff. And this is really the point of this, is to have a dialogue and to have a conversation.
Yeah.
Hearing all of this, the net results, are you optimistic? Are you pessimistic? Is it to be determined? I get a lot of people that are concerned about this administration. I get some that are enthusiastic. Let's just be politically agnostic. All of these policies, do you believe that will be more than likely good for the economy and the market, or something that we should be spending more time being concerned about?
I think what's going to end up being more important for the market is how the overall economy is doing. And all these policies that we talked about will have an impact on the edge, but ultimately it's going to rely on companies' ability to grow earnings reliably over time. And when we look at that, like over the past year or two, the U.S. economy, and again, like when you talk to consumers, they don't really feel this, but the U.S. economy has been remarkably strong over the last 2 years. And we have a tremendous amount of momentum in the economy overall. GDP is growing at like 3.5%, which is a great level. We have corporate earnings that should grow next year about 9-10%. That's a great level, right in line with average. We talked about these long-term productivity gains from things like AI. So when I think about all that stuff together, I still think this is a great environment. Like, take politics out of it. There's always going to be policies on the margin, but I think we're in a really good place to kind of continue to grow.
Okay. I think that is the absolute perfect way to end this podcast. So I thank you so much for your time today. I think that was fantastic. We talked on a lot of topics. We stayed under 30 minutes, which was my goal. I appreciate you taking time out of your schedule, because I know you're busy. I know it's hard to fit these things in, but I can't wait to send this to my clients.
So great to chat. I appreciate it.
Absolutely. Thank you so much for your time today.